You're on. My apologies.
Oh, we are? I can only see David. So again, Oscar, thanks very much for putting this all together. I will be moderating today. Paul Carlson-Willis, I'm the CEO of Justly Markets. We are a new fundraising platform for CF, Reg A, Reg D. We have a focus on ESG. We will be an impact broker-dealer. What we mean by that is that the deals that we do have on the platform that aren't ESG, we will, as a company, be donating a certain amount of our profit on those deals to an ESG charity. And we are owned by Ideanomics, who are listed on NASDAQ, who specialize in electronic vehicles. David, would you like to introduce yourself, please?
Yes, thank you so much for having me here today. My name is David Lee, and I'm the founder of NetShares. We are an SEC registered broker dealer. We're actually a startup. We just got registered a little less than a year ago. And just to kind of give you some background on me, I've been in the brokerage space for 25, 26 years. Primarily in the retail space, managing investment portfolios for clients. And, I worked at Charles Schwab, Morgan Stanley, and Raymond James, and most recently at Wells Fargo Advisors, where, we'd help people manage their investment portfolios. And, a few years ago, I actually left the brokerage business to concentrate 100% of my time and effort on the franchise space, because it's, we also operate some franchise businesses. And in that process, we started doing some research on equity crowdfunding and got really, really excited about it. And so about a year and a half ago, we submitted an application to operate as a broker dealer. And we finally got approved earlier this year. So for the past 10 months or so, we've been going out and getting registered in all 50 states. We just got that done this month. It took some time. But, under our broker dealer, we're looking for, Reg CF deals, Reg A plus, and also Reg D offerings. So we're a new startup and excited to be here with you guys.
Andrew.
Thanks, Paul. Yeah, appreciate KoreSummit, obviously, for having us. My name is Andrew Bull. I'm the founding legal partner at Bull Blockchain Law. And as you can imagine, it's a law firm that's dedicated to clients dealing with blockchain technology. So obviously, we facilitate a lot of the legal background work that goes into launching a Reg CF offering or Reg D offering or Reg A, whatever the exemption that is really sought. I started out on the technology side of blockchain, running a crypto mining business years ago, and then to the legal side. So yeah, I mean, at a high level perspective, we're really just trying to make it as simple as possible, working with also broker dealers like David's company as well, that are trying to facilitate that process and that timeline and really create a easy path for clients to kind of operate through from a compliance standpoint. I also am teaching a blockchain law course at a law school in Philadelphia where I reside. That's it.
Thank you, Andrew. And Marty, last but not least.
Yeah, thank you. Marty Tate. I am a securities lawyer based out of Salt Lake City, Utah, with a boutique corporate finance and securities firm. I have been involved in the crowdfunding space since the very beginning. That's where I met Oscar and KoreConnects. Was involved in the early stages of the Jobs Act, and since that time have advised dozens and dozens of platforms, issuers, broker dealers, and other service providers in this space. Back 3 or 4 years ago, during sort of the ICO boom, a lot of the people that we were doing crowdfunding for, those calls got replaced with people wanting to do token offerings. So we dove headfirst into the deep end of that, and have been advising companies, issuers, service providers on, basically all things having to do with token offerings, blockchain related businesses and offerings and digital securities. Yeah, happy to be participating. It's a great group.
So to start off, Marty, I'm going to come straight to you. As you say, you were here at the beginning of crowdfunding and seen all the legal changes. I think the best place to start is, what's Finra and the SEC's definition of a security?
So, Andrew's laughing.
I thought I'd start with an easy one for you.
I don't know if that's an easy one. A security is sort of. Andrew's laughing because I'm. You're kind of stumping me because it's a broad definition, right? I mean, a security is an investment product. It's something that, I mean, I guess you could go to, go to the Howey test and say, what is the intent? There's a sort of the factors that are there, but a security typically is, I mean, when most people think of a security, it's an investment, whether it takes the form of debt, whether it takes the form of equity, some other investment product. It could be, revenue sharing. It could be anything that somebody acquires or gives, gives value for with the intent that there will be, potential gain or increase. But trying to say, and I think that's been one of the biggest issues with tokens is trying to say, okay, is it a security or is it not? Early on, people would say, well, this is a utility token, but it might have some sort of, it might have an actual utility or a nominal utility. But if people were buying it with the intent that it was going to increase in value, then the SEC said, you know what, that looks like a security. I mean, that looks like an investment product or an investment contract, and so you say that's, you're leading off with an easy question, but I think that's a really difficult question to kind of pin down, especially in the space of digital securities and tokens and coins. I think that are digital assets. I think all of those things are NFTs, all of those things, that's the big, huge question that we continue to grapple with and try to put laws that have been in effect for 80 years and have developed over the past 8 years, trying to use those to guide our the legal advice that we give, the interpretations that we provide to digital securities and tokens. So long answer that with a lot of probably question marks at the end.
And we all know that wasn't an easy question, and is kind of at the root of everything here, certainly with like the NFTs. And Andrew, because you were laughing at poor Marty getting stuck there and getting the trick question, we start looking at NFTs and the different digital securities that are coming in. And again, they touched on how Finra looks at this, the SEC looks at this. How does your approach change on the legal side towards these than what would normally be a traditional placement, a traditional security?
Yeah, for sure. And to Marty's point, the complexity of that general question also leads to kind of every situation being different. It's almost a case-by-case analysis. And the SEC has obviously been pretty clear about that from a contextual standpoint. And so we have this administrative ruling precedent and some federal court precedent. But the reality is that we don't have a massive amount of precedent in the context of digital assets. And so realistically, when clients come in and we start kind of having those preliminary conversations, it's really about honing in on exactly what that investment is, what that economic interest is, and what it's representing. Because if it's something in the traditional sense that is equity or debt, that's relatively clear. You can kind of categorize it akin to something that was representative in the traditional context before digital securities even existed. And so we can kind of think about it, right, as the technology is now coming in to create a almost a larger ease of access in accessing digital assets. And that is really counterintuitive to the compliance side and the exemptions that we have in the United States under the Securities Act. So from a high level perspective, and then without even going down the rabbit hole into like royalty-based NFTs this early in the panel, but realistically, there are all these different now applications from a technological standpoint, and every client is going to have some one different risk perspective, but also two, some different economic interest baked into whatever it is that they're offering. And so that's why it's super important to kind of narrow it down to determine, hey, okay, what is this economic interest? Where does it sit best in if the exemption process or the full registration process with the SEC? Or are you going to be that company that goes and tries to form offshore and release it without being exempt? The latter, obviously, carrying the largest amount of risk in this context. But all of it is really getting to this general notion of, okay, we have these parameters, we know what they are in the traditional sense. How does this new technology fit into that mold?
Excellent, excellent. And so, David, you know, part of being a broker dealer like Justly, you know, we come up against potential issuers that are looking to fundraise, be it CF, Reg A, Reg D. So in this space, under these digital securities, do you do anything different from your end as far as DD is concerned? Or or would you use the legal groups like Andrew and Marty to do their process, work with the SEC, and then come back to you for the fundraising? You're on mute, David.
Yeah, I think it's more of a concentrated effort. You know, us and the legal team will work together to ensure our due diligence is done properly, and that there are no, you know, like disqualifying events. I don't think the legal team's going to do the bad actor checks, but you know, we definitely want to do that on our end, and just make sure, you know, the business is a viable business, and that the business idea makes sense, right? And so, yeah, you know, there are certain areas where we'll work with the legal team to make sure the due diligence process is done correctly, and then there are other things that I would do on our own, like the bad actor.
Excellent.
Yeah.
So flipping to you, Marty, on that, what happens on the legal side? Issuer comes to you, is looking to do Reg A. What's the process? How would you work with them on this?
Yeah, so and that's an interesting start, because a lot of times the issuer will come to us and they don't necessarily want to do a Reg A, especially with the digital securities. They might come and say, we have this token, we want to do an offering. We don't think it's a security. It has a utility. I mean, that was kind of the traditional story. Now, I more and more people are understand that what they're offering is a security, and we'll provide them kind of, okay, well, here are the options, here are the exemptions to these offerings, and you know, you've referenced those, whether it's a Reg CF, a Reg D, or a Reg A, and then the questions there just follow the traditional questions. Okay, so I do want to know, I do want to understand what the token is, what they plan to do with it, why are they selling it, and you know, if it is a good candidate for, you know, something like and it depends also, like, what is the audience, who do they plan to sell it, how much do they plan to sell? I mean, that's going to dictate the exemption that we're going to use. But going to your question about if they wanted to do a Reg A, so they want to sell, you know, more than 5 million and, you know, up to 75 million of this token pursuant to Reg A. I think it's really important to understand, again, those questions. What does the token do? What are you selling it for? How will it operate? You know, I was involved in a number of early Reg A tokenized offerings, and that, you know, all stalled out. You know, it wasn't unique. I think most most of those offerings stalled out because the SEC just had so many questions. A lot of those questions revolved around the secondary trading and the transfer agents and how those were tracked, which groups like KoreConnex and other groups have helped provide better answers for that. But we would get started just by finding out again about the company, what they want to do with the token, and really the attributes of that token and how that will work, because those need to be adequately described in the offering circular, as well as particular risks that might be associated with that token that might be unique, and in addition to the standard risks that would be associated with the digital security.
No, and again, Andrew, that's great, money. And Andrew, on that side of things, you go to the SEC. Has how you approach a digital security listing with the SEC in this Reg A space changed the way you have to present these documents to them, or is it still the standard document you would have used 5 years ago?
Definitely has changed for sure. I mean, without a doubt, and to Marty's point, I mean, like 2017 submissions, they were just getting batted like away left and right by the SEC, and it's transformed astronomically over the last 4 years. And the language component that went into, say, the application, and also the stage at which the business is another contributing factor, because for all intents and purposes, the Reg A was really meant to try to get a company that is like already into their revenue generating phase and now wants to theoretically go public, but not fully go public. And so the language that we're inserting into the documents themselves is very much structured around some of the questions that Marty brought up in terms of the transactional timeline of the token, how it's going to function, what is its actual purpose, and those descriptive disclosures as well in regards to how blockchain technology functions, how third-party service providers are going to function on these networks as well. And so all of that kind of gets curated into a new form of language descriptions that are added into the applications. And initially, the SEC, they just, for lack of resources or time or for whatever reason, were very standoffish to that information and really not solving their own learning curve. But we've seen that transformational change definitely happen. And as a result, there's now kind of key language that can be inserted that really encourages them to say, okay, we can actually understand kind of the larger ecosystem that's going on here in regards to the token. I mean, I revert back to one of the early ones, Blockstack, with their token in of itself, where they did Reg D and then switched to Reg A subsequently. And realistically, the whole purpose of it was developmental functionality on their platform from a software developer perspective. So really different from the traditional securities that were being offered in Reg A's before that. And that in of itself requires a plethora of technological information and education really for the SEC. So high level perspective is yes, definitely new language kind of being created. And I mean, like Core and a lot of these other companies as well, they help with that navigation too, which is super helpful.
Awesome. And so David, on your side of things, with Reg A Plus, these issuers do need a sponsoring broker-dealer. So how does that work? What does that role mean? You're on mute again, David.
I apologize. I have people walking in and out. So I think, when it comes to digital securities, what we do as a broker-dealer isn't much different than how we would approach a non-digital security. In terms of due diligence, it's all pretty much the same. It's really, the issuer and them deciding whether or not they want to put this on the, on the blockchain. And, from a broker-dealer perspective, we're registered in all 50 states. That allows the issuer some relief in having to register in all states. But pretty much what we do on the due diligence side and work with the attorneys, that's all pretty much standard, and it's not different than a non-digital security.
Yeah, and you touched on blockchain there, and we do know that KoreConnex, one of the key things with them and and how they're able to do the administration and be transfer agent for a lot of these issuers is that they use blockchain. So Andrew, as you're the blockchain expert, how has that changed in the process, and has it made it easier, again, dealing with the on the legal side, dealing with the likes of the SEC, or has that also confused people a little more because, again, it's new technology?
Yeah, I think it's a little bit of both, honestly. I mean, when they launched the FinHub, that was super helpful because you could, on behalf of clients, kind of bring issues to the forefront, and you're not always going to get a response. I mean, at the end of the day, they're a federal governmental agency, so we have to acknowledge that. But at the same time, at least it meant that they were dedicating some resources to kind of understanding the space. And now they have staff as well that are also specifically dedicated to the space on top of that. So I think that it's actually in line with kind of the general populace as well in the United States, is that they're solving that educational hurdle, understanding the technological component to it over time, but also they have other priorities as well. So we also kind of always have to acknowledge that contextual component is that, for example, the SEC prioritizing increasing the amounts in CF and Reg A, and in terms of how much you can raise, like that's a priority in of itself. And I don't know if they definitely didn't do that intentionally in regards to this space specifically, but blockchain is, for all intents and purposes, really meant to allow for increased participation from the general populace, right? We're trying to solve this kind of not only educational barrier, but sophistication barrier as well from an investment standpoint. And so I think that they're starting to come around to that. And we see that in kind of tangential benefits with them increasing those amounts or allowing for more projects to go through the approval process. So whether that's a direct connection to the benefit of the technology and what it's bringing to the table, I think that's yet to be seen. But for this scenario, at least we are starting to see some element of connection going on for sure.
Excellent. And again, moving to you, Marty, I just touched on, broker dealer of record. Can you explain what that means legally for the issuer? Why do they need a broker dealer of record? And does that limit them to one broker dealer working on their behalf?
Yeah. So with regards to the broker dealer of record, technically it's not required to have a broker dealer. That being said, it's 100% advisable, and every Reg A client that I have, we definitely will steer them that way. The issue there is that there are a handful of states that require, if you do not have a broker dealer, that they require the issuer to be licensed as an issuer of those securities, and that that becomes problematic. You have to have somebody with the proper securities licenses and go through that licensing process. And I guess I have had one Reg A issuer go that path, but I think especially now with groups like yours, Paul, and David's, that are, I think the benefit of having a broker dealer far outweighs any potential costs. And I guess the second question was, can you have more than one broker dealer? Absolutely. You could have a broker dealer that acts as the broker dealer of record, like you said, Paul, and then you could have selling agents underneath. We've worked on Reg A offerings where we had several broker dealers. You had the lead broker dealer acting as placement agent, then you had several other placement agents that were going out and selling the offering. So there's a lot of value, and some, and they vary, and I'm sure both Paul and David can speak to this, but the level of services. I mean, there's the basis. That just having that broker dealer of record, and then in some cases the broker dealers are actually out soliciting clients and and being compensated accordingly for that.
Yeah, and like David said, David's registered in 50 states for that reason, to make it a lot easier for, excuse me, for his issuers. David, staying with that, we've kind of touched on legal, we've touched on the broker dealer aspect, we've touched on where CoreConnex is able to do the administration element and the cap table. How do you, as the broker dealer of record, marry all of that together? Is there a particular process? Is it like I know you touched on it a little earlier about working as a team, but could you explain that just a little bit more on just how you integrate your flows with your work process with legal and CoreConnex?
Well, I mean, it's still a work in progress. Being fairly new, it's just a bunch of phone calls. Getting Marty on the line, getting Oscar and Julian on the line, and the issuers, and just moving forward. As I mentioned earlier, we haven't done any deals through our platform yet. We are getting ready to launch a couple of Rec CF deals in the hospitality space and the franchise restaurant space. But yeah, maybe if you ask me that question in another 3 months, I'll have a better answer for you.
Okay, thank you, David. So Andrew, in my experience on the broker dealer side, the way we've looked at it with issuers is they've come to us, we've done our DD, we like the offering. We then engage legal. We push them to a legal group like yourselves to go through that process of helping them get registered with the SEC as a Reg A. When does the client or the issuer then have to engage the administrator, the transfer agent? Is it at the same time that they are working with you, or is that the second stage after the SEC's given them the Reg A?
Yeah, very much the latter. I mean, there's now a lot of information that's come out of the SEC in regards to testing the waters. So there's the interim period between where they actually even submit the application or get approved for the offering, where they can go out and realistically, not only in the general advertising context, but also really accumulate information and understand whether there's going to be commitments. And of course, you have to provide the proper disclosures in regards to not being able to take any money. And in certain circumstances, some people will want to jump in immediately, and you really have to say, no, you can't do it yet. Like, we're just trying to figure out the level of interest. And so within that time frame, it's very much not an immediate necessity from a transfer agent perspective. But at the same time, BDs can be really helpful in that context as well in terms of testing the waters. So I think that interim period is really instrumental for somebody who's potentially considering the application, because obviously it's a significant cost from that perspective. So that's very much something that we try to encourage is, why not just take a little bit of time, figure out the interest, and then go from there? Because you might find out that there's an exorbitant amount of interest, or you might find out that there's not enough and you're going to switch over to Reg D, which does happen. And that's the reality of some projects, which is totally fine. It's just that we want to make sure that they're not all gung-ho into it, and then they go in and go to the first day of approval, and then they're like, there's no one there on the other end to actually buy it. So that's really what we try to encourage. But as far as the transfer agent goes, it's obviously very important in the process once you are approved. But prior to that, I think testing the waters is kind of helpful before you jump into that.
Yeah, and I'm glad you mentioned testing the waters. That's something new that's just come up. So, Marty, can you kind of, I mean, that rule change has come, what, in the last 12, 18 months of testing the waters and what you're now enabled to do? Can you explain what it used to be and what the difference is now?
Well, the big difference actually is on the Reg CF side, where, Reg A plus, you were allowed to do a testing the waters campaign. You have to be very careful about, what you say, and that it's, and how that, people are just they're making indications of interest. They're not, delivering any funds. They can't do that until the offering is actually live. But the big change was on the Reg CF side, where that was not possible, so that people would kind of go to the time and effort and expense of putting together a Reg CF offering, and they couldn't speak to it. I mean, it was pretty clear that they had to be pretty quiet about what was going on until the offering had actually, until the Form C had been filed and the offering was live. And so now issuers are able to go out and do a test the waters and see what kind of interest they would get even before they do a Reg CF. And the barrier to a Reg CF is a lot lower. It's not a reviewed offering by the SEC, so it doesn't need to be qualified. So and the Form C is really a pared down document compared to the 1A offering circular. So the cost is significantly less. But that being said, it still is a cost and expense. So I think that change has made a difference for people to be able to go out and start talking about what they're going to do. But I think that is an important part about a Reg A offering, that's traditionally there, and I think it should probably be used more. Sometimes people are a little hesitant. They want to be quiet. They want to be careful and not, give away the trade secret or whatever. But I think it's important to go out and make sure that you have that interest there before you are qualified. And like you said, and you don't want to have crickets once your offering's live.
Right, and now that CF is up to 5 million, there's probably a lot more people moving into that CF space now to be able to raise funds. So staying with that, testing the waters, is there any particular that they can and cannot do? How well can they use Twitter? Can they go out on social media any which way they want? Is there a restriction around what they can and cannot say?
Yeah, there is. I mean, obviously you can't say whatever. You're limited in your ability. You need to be careful in anytime you're talking about securities offering, whether you're testing the waters or not. But there's specific disclaimer language that needs to accompany any sort of testing the waters communication about the offering, that everything's subject to your disclosure documents, and the offering hasn't, it's not yet live, and we can't accept money at this point. There's specific language that needs to accompany that. So you can't just go crazy, I guess, but you can. I mean, you can use all of those mediums. Absolutely, you can use Twitter and Instagram and whatever ways you want to advertise it. That's allowed.
So David, again, going back to being a broker-dealer and having the test the water situation, how does a BD or record manage that? How do we know from both being Finra members, they monitor a lot of what we do as a broker-dealer and how we position ourselves. So how does a BD like yourself cover yourself and make sure that you're managing this in a way that fits with Finra rules?
Sure. Yeah. So as Marty alluded to, there are things you can and can't say, and not only a testing the waters campaign, but also a regular Reg CF or Reg A plus campaign, even a Reg D, right? And so our job here as a broker dealer would be to assist the issuer in reviewing their advertisements and making sure that they're not making any outrageous statements and anything that's that's out of line, and so we'll review that. We'll check with legal counsel to make sure any questionable items are addressed. But I think the main point is as a broker dealer, we're here to provide guidance from a compliance perspective. That's our primary, and then secondary. Some broker dealers will go out and source investors, and they'll there will be an additional charge for that. But basically our role is, as Paul, is to make sure that the issuers are staying compliant and that they're abiding by all the rules and regulations. And so we'll work with Marty and Andrew and council to make sure that that they're compliant.
Excellent, excellent. So, Andrew, when we look at the process, and we've kind of touched on every aspect now, the key elements definitely is on the legal side. I mean, until the SEC, the Form A is done, is there anything else that we haven't touched on that we need to be aware of, especially around digital securities compared to, as I say, previous things? I mean, I'm a big follower of Tim Tebow, and he's just launched his NFT for Legends. And then you have the Dallas Mavericks now giving out NFTs for anyone who turns up and watches them play for basketball. So, I mean, this isn't going away. So, what is there other elements that we should be aware of?
For sure. I think from an investor perspective, so the client thinking from the perspective of their prospective investor, talking about lockup periods, for example, or constraints on resale. These are really important subsequent developments that get factored into the equation as well, because sometimes we have clients that we need to kind of explain this process so they know that day one, their shareholders aren't going to be able to turn around and immediately go do something right with their shares. Or now we're even in the phase of NFT products that are out there where maybe revenue being generated from NFT sales that are flowing into the company and will be distributed to security token holders, though those processes might not take effect after until a certain period of time has transpired. So it's really about kind of managing expectations, because obviously the blockchain and cryptocurrency industry moves a mile a minute in terms of everyone's expectation of what they're getting out of the industry. And you really have to taper those expectations, because the reality is that these constraints are very much predicated in consumer protection. And so there are examples around someone who's a retail investor participating in a Reg A. Like, you're not just going to be able to come in with $1 million investment. Like, that's just not going to be realistic, because you're either most likely accredited and it doesn't make sense. But if you're just qualifying as a retail, you have limitations on that. So it's not only limitations over investment, but also limitations on timing in the subsequent kind of scenario. And so I think sometimes, again, going back to that general notion that people see tokens in the traditional crypto context and they see them getting listed on exchanges and then everything goes gangbusters. And it's really not the same scenario, because we're talking about different economic interests. Well, in certain circumstances, but for all intents and purposes in terms of regulation. And so there's those limitations that should definitely be factored in.
And staying with that, Marty, you know, we talked a little bit about due diligence and these companies coming to yourselves and Andrew, looking for guidance and how they structure their offering. Is that something that you see as a key part of the legal element, or are you looking for, again, the broker-dealer of record to be helping more with the DD and the way the company is positioned and what they're raising? You're on mute, Marty.
Sorry, I'm pulling a David. I think that that falls on us. I mean, if the broker dealer has input on that, that's fantastic. But you know, really, I think that the clients are coming to us for help on how to structure it. What's the best route to go in offering their digital, their securities or their digital securities. And I think that, you know, I tend to do, you know, maybe Andrew's better at this, but I tend to provide a lot of sort of initial free consultations where I'm you know, weighing in way more on maybe even the business model than I probably should be. But I think that people need to, a lot of times they have a great idea, but there's things that they just haven't thought of. And when you're trying to take this idea and fit that square peg in the round hole of U.S. securities laws, it can be difficult. And we have to kind of we have to be creative in the way that we think about these things and say, okay, you know, is this the best option. And you know, I had a conversation just yesterday with a client, and they spent a lot of time and money ramping up their idea, and I could just see it was a Zoom call, and I could see in their faces as I was kind of presenting these, you know, just asking questions and saying, well, you know, how does that differ? I could almost see the excitement, you know, drain out of them. Like, oh man, we haven't really thought about that. But I do feel like that's part of our role, is to help them, you know, understand the legal landscape, and, you know, help them determine if this is a viable option given that landscape.
Yeah, and we've seen the same with some issuers coming to us. It's, you know, some issuers know basically exactly what they want to do and how they want to do it. In a lot of cases, this is not their first rodeo. Others really are starting from scratch. You know, they've had a business for a year or two, and now they've suddenly realized that there's these platforms and these capabilities to raise money and help them go to the next level. But what that means, that they don't really know. And then you have also the issuer that comes along who says, hey, you know what, my company's worth this much. And you sit down and go, how do you get to that number? And their expectation of what they can do, how much they can raise from their initial evaluation is not always accurate. So when you come across these different types of issuer, Andrew, is there a particular place that you start and be able to give them guidance?
Absolutely. So jurisdiction is one of my first questions always. Like, who are you expecting to sell this to? Because obviously in this industry, there's sometimes an expectation that they're going to be able to offer it to anybody in the world. And that's just unrealistic. And so that's typically where we start. And then we start honing in on some of the questions that Marty was highlighting. But also on top of that, just kind of pulling on that thread as well, is really talking about the functionality of the asset, because everyone's seeing digital securities, for example. The buzzword benefits are secondary market liquidity, ease of transfer, so on and so forth. And I think in having that conversation, not only about the jurisdiction, but then about what the economic interest is, what's the purpose, what's the long-term objective, that all then kind of pulls out some of, if there's any underlying motivation for what they're trying to accomplish. And I'll revert back to your prior question about NFTs. It's interesting how they're seeing, like, for example, companies are seeing other companies that are releasing lines of NFTs, and they're like, oh, we want to connect our line of NFTs to the security that we're offering. And then there's questions over the asset-backed component of the security and whether that would fit the mold for Reg A. And so within that process that you're referencing, it's really all about kind of trying to pry out those underlying motivations as well, and what they're going to do subsequently, even if it doesn't necessarily have to do with the digital security that they're offering. So I think that's really what is also kind of a more ambiguous concept within these discussions that is definitely important to be highlighted for sure.
I want to weigh in on something, because Andrew said that I think is really important, is that, and Oscar alluded to this in his introduction, is that sort of the allure of the secondary market and trading. And I think that people, you know, think, okay, hey, we'll sell our you know, digital asset, and we'll do it in compliance with securities laws, or we'll, you know, and then we can list it on an exchange, or we'll do a Reg A and it'll be an unrestricted security, and therefore we can immediately put it on exchange. And that's, you know, that's something that's just not that simple. I mean, even, you know, in the qualified Reg A's that you're seeing with tokens, it's saying, I mean, they're just saying, we might do this. You know, we hope to do this, because that I think that piece is still incongruent with U.S. securities laws. They haven't. I mean, you can build it into smart contracts. How, you know, that I think that piece is actually, you know, fairly, I don't want to say simple, but you could build it into smart contracts the way that restrictions could lapse, but that tying those two things together, these secondary trading exchanges or alternative trading systems with the securities, whether it's sold under a Reg CF, Reg D, or an unrestricted security sold under Reg A. It's still something that's not 100% crystal clear.
And again, one of the elements here, right? The Jobs Act changed things recently in the sense of, with CF and Reg A, you don't have to be an accredited investor. So is that made, and again, I'll throw this one to you, David, has that made it harder for the digital securities in the sense of how, again, the information you send to the potential investor, read transparency, and to be able to explain the actual security?
Can you repeat your question again, Paul?
So with the ability now for non-accredited investors to get involved in CF and Reg A, and digital securities coming along, the information, digital securities are quite complicated, as we've all touched on. How does a broker-dealer manage that information and making sure there's transparency around the real key points, as as Andrew and Marty have touched on?
Yeah, so it's really about disclosure, right? And so we want to make sure that all the key elements are in the disclosure documents, whether it's a Form C or the other any other forms. And I think that's probably a little bit of a challenge for me personally, because when it comes to crypto, I don't, quite frankly, I shouldn't say this here, but I don't understand a lot of the nuances that are out there, and so that is a bit of a challenge. But what we want to do here at NetShares is do deals that just more your conventional deals, cash flowing deals, royalty assets, real businesses that have viability. And so I think the onus is really on the broker dealer, on us to be able to vet these companies and making sure that the business prospects of the issuer are at least solid and viable. Now, the business may not end up being successful, but I think it's up to us to vet that out and make sure that what they're stating are true statements, and there are no omissions of facts and things like that. So I think the other important key to this too is investor communication. After the deal's been funded, what is the issuer's communication strategy? Like publicly traded companies, they have quarterly conference calls, right? Quarterly updates where they provide results and revenue, top, bottom line, et cetera. I think as we go more deeper into this space, we have to have a good, solid investor relations strategy and more investor communication, and that's how we'll increase our transparency in the space.
And I 100% agree with you there, David. I think the key element is pulling that data and making as much data available to the investor as they can. And certainly on the platform that we have at Justly, we have a data room. So we pull in as much information as we possibly can and have a data room. And so, Andrew, talking of the data room and the information that we're gathering on the BD side and offering out there to the underlying investor, has that changed any as well in this digital security space? Is there more information that has been asked for or is needed than it used to be?
Absolutely. I'll give you an example. So I had a company that was tokenizing a really large golf course in the Caribbean, and they got full on into their offering to the extent that they kind of discovered that a lot of their traditional investor pools were struggling to understand the concept of a digital security. And there were questions around custody and them being concerned over their private keys and managing all of that. And so as a result, there was a lot of lifting on behalf of my client that really resulted in them communicating over and over again, trying to kind of provide some reassurance. And that's definitely different because it's more of like a concern over a technological issue that may be unrealistic from the perspective of the investor, but it doesn't matter if it's unrealistic. They have that perception. And so there was basically a push to try to revert back to traditional securities in the offering as well, to try to serve both groups of investors. And anyways, that's relatively problematic in of itself, as you can imagine. And so, I mean, this is a few years ago, and so it's changed for sure. But at the same time, there's definitely that component from a investor perspective that if you're not providing kind of streamlined information that's easily digestible, then there's going to be confusion over what the investor responsibility actually is from a technical standpoint. So that's definitely something that has changed for sure, comparatively to traditional offerings.
Excellent, excellent. I see Oscar is popped up in the corner.
I'm just
hi,
a
Oscar.
very small figure here in this whole thing. Great discussion, guys. I know it. You know, this discussion is evolving. There's so many different moving parts to it, both from the legal and the broker-dealer side. And I know people have a lot of different questions. So one of the things that's really great about this particular event that we've not been able to do, if all of you have been there before, is that we've never had the opportunity for you to engage with each individual speakers on their own, because I know some questions can be general, but so we have about 5 minutes. If there's anybody here right now that has any questions, you can simply raise your hand and we can have you ask the question from, Paul, David, Andrew, or Marty. But I recognize as well that some of these questions are better suited to be in the lounge, which we're going to be going there to shortly with everyone. But I want to give everyone an opportunity here, because there's been a lot of chats going on with questions, so we want to make sure if there's anybody's got their hands up, raised up. So I'm just going to keep an eye on that. One of the things that strikes me is I think Andrew, you were saying at the end that I liked is that there is all security tokens and digital securities, they're not all the same, and not all of them are ported the same way. So the issue of the discussion of custody and all that, people really need to understand when that terminology comes up. Would you not agree with that comment?
100%.
Yeah, I run into this a lot. It took me a while. I got to be honest with you. When people hear the word custody, I now know that we're now talking about an institutional investor at times. That's one, and that is sometimes it's not going to play so well with the retail investor. And people really need to. There you go. See, it's the people really. Look, I'm a simple individual. The way I think, I look at the regulations, which are amazing. I cannot say enough. I'm a Canadian. I love the Jobs Act because, listen, if you follow the law, you can do so much with it. You really can. When you're from another country, you will appreciate what you can do. But what I noticed over the years was this using buzzwords people are using with digital security. I need a custody. There's got to be a custody component to it. I need to hold it here. I need to hold it. But what they're not asking, what they're not prefacing, please, elaborate on this. They're not prefacing it on what type of investor we're talking about. Which, that seems to be the nail biter that a lot of people need to understand. This is for that type of investor, and this is for that. I'd just like to hear your comments on that.
Absolutely. No, I couldn't agree with you more. I mean, realistically, too, you have, when you open it up, say, in the Reg A context, and you're having an influx of retail investors, it's going to be a drastically different perspective because 9 times out of 10, it's not like they're going to have this massive book of investments behind them either in terms of experience. And as a result, it may have some different level of understanding, and they may have maybe entered into the crypto context in some way, shape, or form, and have this unrealistic expectation of their ability to move it, going back to that point, but also what they can and cannot do over their elements of control. And so that is really, and the example that I was giving as well was very much the larger investor pool were accredited investors. And just, I mean, just as a byproduct of what that pool represents too, it really is important to massage the message that's going to them versus say somebody that, oh, I'm going to do this Reg CF and I'm going to put in my capped amount, which is under like 10% of what I would make this year anyways. So it's not like a massive investment from the perspective of how much of amounts are actually being put into the project. And as a result, there's a different perception. There's a different component or motivation for what element of control they want and what their expectation is. So I really couldn't agree with that point more. That, I mean, for all the projects out there that are considering how to angle the language, the marketing, the legal, whatever it is, tailoring it to your investor base. And this ties right back to Paul's discussion with all of us about testing the waters as well. It's like, know your investor base early and know it well and curate that language as quickly as possible, because it's going to be a massive component to your success.
Well, you know, it's refreshing to have that conversation like this. You know why? Because I remember a few years ago, nobody could get that narrative. It was too convoluted. You remember that?
Right.
Marty, I think you remember that as well in the early days of crowdfunding. Which investor are we talking about? And nobody could really define it. And this is really important for the audience here, is that, you know, we're not saying and when we and companies say, okay, no, there is no custody, and you're going, no, there is. You got to put it in the context, what investor base you're targeting. That's going to determine a lot of it. And can you mix and match? Of course you can. But then you need to understand what is it going to take to get there, for whether it's a security token, digital security, stablecoin, or NFT. And Marty, I know you're now dead on that right now with Dennis, with David Lee, and a few things like this. And the confusion I often see, I don't know if you see it as well, they get caught up on the naming of it. And I always go back to the basic. It's a security. It's either Reg D, Reg A, or Reg CF. These are the legalities. You know, what advice could you give them as well? I mean, you heard what Andrew said on the investor side, but some of them are driven by the regulation, and yet they start putting all the other components to it. You know, just love to hear your thoughts on that as well. You're on mute, bud. Can everybody hear him, or is it just me?
No, I can't either.
You know,
no, he's on mute.
You're on mute.
He's just saying that he agreed with everything I said.
Oh, fantastic. We're good. Really, you know, Andrew, thank you. That's an extra skill you have. You can lip read. I love this. Hey, guys, look at that. We finally found a way. I don't want to say it because you'll come after me. No, listen, it's thank you so much. This discussion is moving now. So as I said, we're really trying something very new today. So we apologize to the audience today in advance. So it's going to be, so what's going to happen right now, we're going to end the session, and it's going to look like you're going to go into this other screen, which will have a whole bunch of little tables on it. And you'll see Andrew Bull, you'll see Marty Tate, you'll see Paul's and David Lee. So you can interact with each of them individually and go and ask your questions there. You can turn on your camera. You can turn on your microphone, our guests. You can also type messages to them. And of course, do not worry. Their contact details, as I mentioned before, it's at KoreSummit.io. So you'll always have that. And we'll be emailing that to you as well. And the session is recorded. So for Paul, David, Andrew, Marty, thank you so much. I know the topic was a lot. I know it's, and don't feel like it's anything more than it's evolving. Marty and I have been doing this for, I'm not going to say because I don't want to say how old I am right now, but we've been doing it for a while. And I've met Andrew not that long ago. And what we do share with the legal community today is that we have one thing in the forefront is we want to make sure you do it compliantly. That's number one. Number two, it's safe for you, the investors at large. And we want you to have fun with it. Of course, explore these new ways to raise capital. But don't forget, at the end of the day, people are putting in, they're investing in your company. No matter how fancy the gadget is, it's still an investment. And as long as you remember that, you have a bit of responsibility. So we're going to end the session. We're going to go on right directly to the lounge. There'll be a 10-15 minute break there between the next session. I hope everyone enjoys it. Don't leave. The next session will automatically start once the lounge part is done. Thank you, everyone, and we'll be talking to you soon.